Hi everyone! Asian stock markets are extending gains today following Friday's rally on Wall Street. Optimism was also fueled by strong retail sales data for September from Australia and Japan. However, Asian stocks may lose momentum due to concerns about China's economy. The manufacturing and services PMI indices contracted considerably in October. Besides, the resignation of the Chairwoman of Longfor Group intensified the property crisis. After a shift to a softer stance by some central banks last week, traders took notice of a new article in the Wall Street Journal. A similar article on the likelihood of slowdown in aggressive tightening by the Fed was released 2 weeks ago. Stocks jumped immediately following the release of this article, despite the fact that the chance of such a scenario remained low. Curiously enough, in the new article, the analyst expressed the opposite opinion, hinting at a long period of monetary tightening. Both articles were written by the same author, Timiraos. It indicates rather clearly how quickly market conditions are changing these days. Economic uncertainty and mixed third-quarter earnings reports are also weighing on stock markets. The recent fall in the shares of US tech giants such as Apple, Amazon, Alphabet, Meta, and Microsoft came as an unpleasant surprise to investors. Nevertheless, they continue to factor in a potential slowdown in rate hikes by the Fed. A rally on Wall Street depends primarily on the Fed meeting. The rate decision will hardly impact stock markets as traders have already priced in a 75 basis point rate hike. The GDP price deflator, which is viewed as a more comprehensive inflation measure than CPI, climbed in September and amounted to 5.1%. Therefore, given the strong economy and galloping inflation, the Fed is likely to stick to an ultra-hawkish stance. It's widely expected to hike the key rate by 0.75 basis points on Wednesday. Traders are also waiting for Jerome Powell's speech with bated breath. The further movements in the equity market will largely depend on the tone of his speech, hint, and signals. If there are any dovish remarks in his speech, a rally in the stock market will be unstoppable. However, these are just assumptions. The US dollar managed to rebound. In the morning, it moved away from the monthly low of 109.53 reached last week. In the Asian session, it climbed to 111.21 versus its main rivals. The US currency is likely to grow slightly following the Fed's rate decision, as traders have already factored in this rate increase. For this reason, the US dollar is rising quite slowly. It kicked off the last trading day of October in the green corridor, consolidating between the support level of 110.72 and the resistance level of 111.22. The yen weakened immediately due to the strengthening of the greenback. The dollar-yen pair was trading at 148. It has already approached 148.29. The main bearish factor remains the same: the ultra-loose monetary policy of the Bank of Japan. At its meeting last Friday, the regulator confirmed its commitment to the dovish stance for the long term. In the Asian session, the yen dropped significantly against the US dollar. The pair was trading in the intraday upward range of 147.46, 148.34. The RBA meeting will be held tomorrow. The Aussie may retreat following the RBA's key rate decision. The central bank has recently shifted to less aggressive tightening. Tomorrow, the regulator is widely expected to raise the interest rate by 0.25%. Some analysts still hope that the RBA may undertake another aggressive rate hike as inflation in Australia soared to a 32-year high last quarter. However, the Aussie is unlikely to advance in both scenarios. The divergence in monetary policies of the Fed and the RBA is quite large. So the Australian dollar began this week in the red price corridor of 0.6388, 0.6430. The Australian American dollar pair decreased to 0.6392. The outlook remains bearish. This week will be quite eventful. The Fed meeting will take place on Tuesday and Wednesday. On Friday, the US will publish its labor market data. In addition, investors will closely monitor the meeting results of the central banks of the UK, Australia, Norway, and Malaysia, as well as the Eurozone's GDP and inflation figures. Subscribe to our channel and stay up to date with the latest market news. See you!